So let's bring in Chris McMahon, CEO of Aquinas Wealth Advisors. And
but it's that bifurcated economy. I think the working folks are really suffering in this economy. We're starting to see, I think, a little bit of that either AI layoff or AI, that's the cover story to make these layoffs. So people are hurting, interest rates are high. So it's really we got to hope that Wirth does when he's able to, make some cuts.
So could this help him make the argument then? Retail sales came in better than anticipated.
Yes.
Of course, adjusted for inflation, retail sales haven't done anything, but they haven't done anything for years. Could he actually use that for leverage, do you think? Because he's got to do some serious arm twisting.
Yeah, I think the president will certainly help him, and at all costs, he won't look to oil prices. He'll say, look away from those oil prices. Right. But I think we need to see at least, I think it's going to be relatively quick. I think within 30 days of this thing ending, people are saying it might be 6 months or 8 months. I think within 30 days of this thing ending, we got to get oil prices down. And once we have oil prices below maybe 80, I think we absolutely could see, hopefully, 2 cuts by the end of the year.
A lot of criticism about this rally, right? Yes. So you've got 10 names, 87% of the move, right? NVIDIA, Alphabet, Micron, Broadcom, Apple, Advanced Micro, Amazon, Intel, ExxonMobil, and Cisco. Is that okay with you? Listen, for me, I think what people don't realize, there's always just a handful of names. Now, I don't think it's ever been this pronounced,
sure,
but there's always typically just a handful of names doing the heavy lifting.
Yeah, maybe the dispersion is even greater this time around. Right. Does it bother me? Yes. Does it keep me up? No, because I think what's going to happen, I think likely we're going to see those numbers on Wednesday. Unfortunately, we're clinging to those numbers so much, but that Wednesday announcement of NVIDIA, I think is going to drive these prices and continue to keep this thing rolling because they keep blowing it out of the water. I think you've said it so accurately. We're not sure even if they blow it out of the water what that does to the stock price, but I think there's opportunity, particularly as you know, if you take those 10 stocks out, what happens to the market? It's up 5%. There's money to be made in large cap stocks.
So you're kind of licking your chops to do some rotating here.
Yeah, absolutely.
You also that maybe it's time for some of the PE ratios of these semis are just a little bit high. Now we always kind of talk about Micron, which is like single digits, but Broadcom 23%, Intel 71%, Texas Instrument 34%. You think they can give up some of that and be okay?
I think we can have a 20% adjustment and be fine by the end of the year. I think, SOX was at 58 times PE ratio, and when it compared to the weighted S&P at 20 times PE ratio, I think there's some room in there to give that back, let everybody take a breath, and maybe, I think, disperse their assets across regular non-top 10 stocks.
One other area then, because people are watching now, they're saying, okay, if I start taking profits on some of these high flyers, where do I put the money? How do you feel about small caps, which were crushing it out of the gate? They crushed it in January. Things turned around with the Iran conflict, but they're acting better now.
We're not really rotating towards small caps right now. We're saying that if you take the Mag 7 out of those stocks, there's top at least 6 of them, and you say what's in the large cap area that's undervalued, there's too many things that are underperforming in that sector first before we have to pivot to small cap.
So here's the bottom line then is you're saying more or less stick with what works, but you think maybe a pause for the cause kind of thing. Does that mean you take a few chips off the table and buy the next dip?
Absolutely. I think it's a good time to maybe consider trimming those things. Get back to your asset allocation model. Great time never a bad idea to go back to your model. Take 5, 6, 7% off the top, put it in cash, and see where we are in August. I think is a good example.
All right. Well, we'll have you back before August.
Thank you, sir. Thanks, Charles. Thanks for having me.
Thanks a lot, Chris.